Hello, and welcome to the 2024 North Coast Ventures Annual Meeting. My name is Todd Fetterman, and I'm the Managing Director of North Coast. We are recording from the offices of Thomson Hein, our longtime partner and annual meeting sponsor. We're pleased to have record attendance tonight with over 600 investors, startup founders, and guests of the North Coast Ventures community. This is a testament to the culture we have established and the significant strides our portfolio companies have made over the past year. As we navigate tonight's agenda, please remember we are regulated by the SEC. The information and opinions shared tonight are designed to be educational in nature and should not serve as a basis for investment decisions or be viewed as an offer to invest in securities. With that said, we're excited to share what we think is a great agenda. We'll begin with an update on the funds, highlighting the launch of the syndication fund model, which closed in December of 2023. The CEOs of 5 of our fastest growing companies will present 5-minute operating updates. We'll review the individual portfolios and offer select company updates. And lastly, we'll wrap up the evening with a fireside chat with Marc Harrison, CEO of HATCo. In that conversation, I'll ask Marc about the partnership with General Catalyst, HATCo's initial engagements with more than 20 healthcare organizations, and his vision for HATCo's acquisition of Suma Health. Before diving in, I'd like to offer a few important thank yous. First, to our main event sponsor, the law firm of Thomson Hein. Thomson Hein's new venture group is strategically focused on representing startups and VCs across the country, but also, especially here in Northeast Ohio. The group represents high-growth companies of all sizes and stages in industries including technology, healthcare, and consumer products. We appreciate their contributions to the startup ecosystem and look forward to working with them in 2024 and beyond. Additionally, we'd like to thank North Coast's nearly 25 Innovation Council members. These partnerships enable many of our key activities. Specifically, we acknowledge the Ohio Third Frontier program, which across 6 of our funds has provided almost $25 million in matching investment capital. Lastly, we extend our gratitude to the North Coast Ventures community of over 470 individual investors. Your engagement, expertise, and willingness to leverage personal networks has been instrumental to driving portfolio company success. We're deeply appreciative of your commitment and the impact it makes. With that, let's dive in. As a reminder, our investment thesis focuses on software companies, typically business-to-business software-as-a-service models. These companies are often in areas such as digital health, healthcare IT, insurtech, and the future of work. We look for opportunities with the potential to leverage the power of our engaged investor model to help drive value and open doors with market-making customers. We began the year investing out of 3 separate funds. 2 of these funds invest at the seed stage, our $15 million Seed Fund 4, and the then in-process syndication fund, which I'll share more about in a moment. The other fund is our $24 million Acceleration Fund 2, which invests at a slightly later stage once a company has generated meaningful traction, typically more than $1 million in recurring revenue. As we reflect on 2023, it is important to note what a dynamic year it was. After receiving a sneak peek of the power of generative AI in the prior fall, the full coming out party took place in 2023. Expectations and corporate priorities shifted quickly, with tools like ChatGPT reaching 100 million users within only 2 months. It's hard to overstate the impact and potential of generative AI, and we're already seeing the benefits of rapid adoption across our portfolio. Post-COVID inflation has cooled off, and many of the most pessimistic economic forecasts were moderated. Silicon Valley Bank collapsed in March with relatively little warning, but also with relatively little collateral damage. In many ways, the net effect was a return to normal, with many metrics settling in at historic averages. 2 examples include publicly traded companies' tech multiples and overall venture capital funding levels. M&A levels were historically low across the board. With this macro context, we want to highlight several milestones from the year. Broadly, North Coast companies generated a record $400 million in combined revenue, with 8 companies surpassing more than $10 million. More than 25 different companies raised over $220 million in capital, reflecting the potential of our portfolios, even in the current economic environment. One of the most important non-financial metrics we track is introductions of value. This is when North Coast facilitates an impactful connection, such as introducing a portfolio company to a new potential customer, investor, or strategic partner. In 2023, we documented 225 introductions of value to help advance portfolio company success. Another high point of 2023 was the completion of our latest investment vehicle, Syndication Fund, which embodies the same investment thesis as our last two seed funds, but with a national footprint. This national approach is made possible by North Coast relationships with over 100 different venture capital funds, angel groups, PE firms, and family offices. It is a deeply strategic approach, as these new relationships also allow us to generate more opportunities for our existing portfolio companies. Additionally, the investor base of Syndication Fund included 50 new investors, which dramatically increases our capabilities for our network and helps position us for future success. Lastly, for 2023, the Ohio Department of Development released an RFP for a new investment program that seeks to support venture capital investing in Ohio. We submitted 2 distinct RFP responses to the state that have the potential to secure $15 million of new investment capital for our next generation of funds. We expect to receive the state's decision shortly. This is perfect timing as we look forward to 2024 and work to establish new vintages for our funds. The first will be Acceleration Fund 3, for which we requested $10 million as part of our RFP response. This fund will allow us to continue investing in many of the best performing companies from the seed portfolios, demonstrating commercial success. We have unique visibility and access to these companies, so deploying more capital as they grow and reduce risk is very attractive. Another objective for 2024 is to build on what is already our most powerful asset, our 470-person investor network, which already makes us the country's largest single chapter fund. The group includes 50 successful startup founders and technologists and over 100 members of the corporate community that bring industry and functional expertise to bear. We're doubling down on building this network, which in turn helps us attract the most promising founders and helps them to grow faster. 2024 will see our team further build out the infrastructure that enables us to leverage the power of our network. Enhancing the rigor of our HubSpot database, better documenting key connections, and using AI to better map these connections are all things we're excited about doing to help drive portfolio company success. With this backdrop, we have high expectations for 2024 and look forward to working with our investors and portfolio companies to make it happen. Prior to handing off to Daniel, I'm pleased to announce our Member of the Year award. This year, we honor an investor who has made a significant impact on our fund, Chris Snyder. As many of you know, Chris is a technologist, serial entrepreneur, and prolific door opener. Early in his career, Chris served as the CTO of MCPC and founded Vox Mobile. Chris was also an early team member and chief revenue officer of 90, a North Coast portfolio company that we'll hear from in a few moments. Chris currently leads Impact Architects, which helps North Coast and several of our portfolio companies implement EOS. He is also on the board of several startups, including our portfolio company, Real Time Intelligence. We thank Chris for his valuable contributions and are thrilled to name him as our 2023 Member of the Year. And with that, I'm pleased to pass the baton to Daniel, who will talk about our fund's investment activities.
Thanks, Todd. Hi, I'm Daniel Luketic, the Director of North Coast Ventures, and I'm excited to summarize our investment activity and portfolio headlines from 2023. As I do, our ask of each of you is this: if you think you could assist a company, please reach out to our team. Every connection to a customer, investor, advisor, or employee is valuable and appreciated. In 2023, we completed a number of initial investments in companies that are new to the Seed 4 portfolio, deploying $1.25 million into these 4 companies. The CEO of Redi will present an update in a minute, but I'd like to briefly introduce the other new portfolio companies now, starting with Exploro, which is a company that specializes in creating engaging and interactive digital platforms to support and educate children and their families undergoing medical treatments. Docket recently rebranded from Bezlio and is also part of our Seed 3 portfolio. Docket is a manufacturing productivity platform built to help mid-market manufacturers streamline their operations. The company is led by Gerald Hetrick, who previously led portfolio company Able to exit. Finally, Real-Time Intelligence provides a supply chain visibility software platform that provides insights into the movement of reusable packaging through food, retail, and automotive supply chains. In 2023, we also completed a number of initial investments in companies that are new to the syndication portfolio, deploying $1.5 million into these 5 companies. You're going to hear a little more about Narratize and 90.io from the CEOs in a minute, but I would like to briefly introduce the other new portfolio companies now, starting with Formotive, which is a Philadelphia-based software company that provides leading insurance carriers actionable insights into the truthfulness and intent of their digital applicants. Uptime Health is a Boston-based software company that simplifies dental equipment maintenance, repair, and purchase events through automation and predictive analytics. Finally, Better You is a St. Paul-based company offering a healthy habits companion as a B2B employee benefit for education and enterprise. We also completed follow-on investments from Seed 4, Acceleration 2, and Syndication Fund in these 9 portfolio companies. We deployed over $3.5 million via second and third checks into these companies. Next, I'm excited to introduce 5 of our portfolio companies' CEOs that will share brief presentations that are mostly focused on what their companies do, traction they accomplished over the previous year, what's on the horizon, and how we can help. With that, I'd like to introduce our first company presenter, Luke Buchanan, the CEO of Redi.health. Redi is a Seed 4 portfolio company.
Hello, everybody. My name is Luke Buchanan, and I'm the co-founder and CEO at Redi.health. Redi is a modern patient support platform that helps patients connect with pharmaceutical manufacturers in new and intuitive ways, all while navigating a highly regulated and complex compliance environment. Ultimately, our goal is to help patients achieve better health outcomes, and we do that by creating access to adherence-driving support offered by the makers of high-cost medications. But before I get into our solution, I want to give some background on Redi, who we are, and why we're doing what we're doing. So Redi is located in Columbus, Ohio. The majority of our organization is located in Ohio, and we're very proud of that. The resiliency of the Midwest as it relates to the VCs that have backed us, including North Coast Ventures, as well as the talent that we have here, is unmatched in its ability to do a lot with a little bit, as we always say. We were founded by former health tech unicorn executives, 3 of us from a company called Cover My Meds, located here in Columbus, and another one, our CTO, from Beam Dental, a large dental benefit company, also located here in Columbus. Ultimately, each person's background has a rich history of monetizing products in spaces that are ripe for disruption. Redi works with top 5 manufacturers today, as well as small single molecule biotech manufacturers that you've likely never heard of. The reason I always say that is Redi is not good for just one type of disease or disease state or type of patient. If a product is high cost and has support stood up around it by the pharmaceutical manufacturer, then Redi is the solution for that manufacturer. So let's talk about the founding team. Luke Buchanan, co-founder and CEO, I've already introduced myself, but Jamin Gandhi, our CTO, comes from Beam Benefits, and he leads our tech organization. Nate Ream, he leads our business development and is our chief revenue officer, and Kyle Grimslid, who is a PharmD pharmacist by trade, he leads our clinical innovation and is our chief strategy officer. So what exactly is the problem that Redi is solving? So if I were to ask any of you today, do you know anything about patient support under the market access umbrella of pharma, you might say no. And that is the primary problem. Almost all patients who are on high-cost medications today are eligible for the support offered by pharmaceutical manufacturers, but only 20% ever get access, and even less even know they have been given access. And that's for a variety of different reasons. The primary is that it requires your healthcare provider to kick off the process amidst a highly burdensome and administrative process of getting patients on therapy that providers are already dealing with. They're likely not going to fill out this additional paperwork. And so only 20% of patients ever get access to this support until Redi. The second part of this is these support centers are fancy call centers that are highly antiquated in their construction and horribly inconvenient for people to access. What this results in is roughly 70% of patients falling off of therapy, of any given therapy across all therapeutic areas, and over $600 billion in lost revenue to pharma annually. That is a massive number, and pharma is very motivated to solve this problem. As a result, 22% of drug spend for any particular drug goes toward these support services. The majority of it goes unused. So the solution around this is Redi, and Redi has stood up a twofold approach to what is a very complex problem. We solve this by injecting consumer health as the vehicle for patient support. And so diluting that down into one simple statement for our solution, we deliver high-cost patient support services through the vehicle of whole health management. The first portion of that is Redi Core. It is a platform, it is also app-based, where you can manage any medication, condition, and symptoms. So it's applicable for anybody's health in general. But we build in directly to that, but still firewalled in a uniquely compliant way, a white-labeled portion of the platform that is likely the most complex area of that patient's health, which is what we are partnering with the pharmaceutical manufacturer on. So the manufacturer is our customer, the patient is our user. The mutual benefit is both pharma and patient want to have better health outcomes. Redi bridges the gap in which we can do that. So you may be wondering, why can't a pharmaceutical manufacturer simply reach out to patients on their own? A insurance company can, a healthcare provider can, and a pharmacy can. Well, those are all covered entities, whereas a pharmaceutical manufacturer, while playing a very important role in the overall care of patients, is not a covered entity. They are unable to reach out to patients without their explicit consent. But if a patient doesn't know that this service exists, they can't give their consent, but they can never be educated because pharma can't reach out to them. Redi has the ability through a unique network to be able to identify patients and be that compliant buffer that presents the patient the Redi.health offering and then gives the patient the opportunity to step into the branded support services that they are eligible for. All of this has led to substantial growth in our space, which is one of the reasons why we raised our Series B financing that closed in January. North Coast Ventures was a participant in that, and a very major participant, of $14 million. That was led by Blue Heron Capital, and I'm very happy to be able to announce that and share it with all of you. So how can North Coast help? Well, we have a number of positions open today, and so I would ask all of you to take a look at our career page and dig into your own networks as to individuals that you think are top tier that would fit in at an organization like Redi. Outside of that, we simply need the support of individuals to help identify new network partners. If you have pharmacy connections, payer connections, or health system connections, we want to talk to those individuals to bring them into the impactful Redi network and get their patients this pharmaceutical support in new and compliant ways. That concludes this Redi overview. I hope you enjoyed it. I appreciate the opportunity to be able to present to all of you, and I am absolutely thrilled that North Coast is now part of the Redi family and that we get to be included in these types of presentations. Thank you to North Coast for your support. I look forward to continuing the partnership with you and those that have participated in your organization as well. I also want to thank our existing investors that have also participated in this recent round of financing. It's an exciting time for Redi, and I'm really thrilled that everybody has the opportunity to support us, and we have the opportunity to make everybody proud of the investment that was made. Thank you.
Thank you, Luke. Next, I would like to invite Faris Gawi, the CEO of Vitalized Health, to share more about their 2023. They achieved a number of incredible inflection points last year, and Vytalize is a Seed 4 and Acceleration 2 portfolio company.
Hi everyone, Faris here. I'm the co-founder and CEO of Vitalized Health. Vitalized Health is a value-based care enabler. We partner with independent primary care practices across the country to help them with the transition to value-based care. As most of you probably know, value-based care is a new payment model where healthcare is paid for based on the outcomes and the quality of care, as opposed to a fee-for-service environment where providers are paid based on the services they provide. The idea is that if you pay for better outcomes and lower cost, you will get better outcomes at lower cost, therefore better value, right? Medicare, which is the insurance company for people age 65 plus and disabled, is pushing the healthcare system towards value-based care and has a goal to get 100% of Medicare beneficiaries in value-based care payment models by 2030. Vytalize started 10 years ago as a Medicare-focused practice in New York City. So we built a practice for ourselves. We delivered care directly to our own patients in New York. We then expanded into New Jersey, and over the years, transitioned our model from a value-based care practice to a value-based care enabler, where we partner with practices and help them make that transition to value-based care. What we do is we have a solution that is a complete solution for primary care doctors. They partner with us. We bring financial incentives. We bring technology. We bring an engagement model where we have physicians working peer-to-peer with physicians, and we maintain a set of clinical services that we provide in support of practices directly to patients. We incentivize practices on a monthly basis for completing value-based care tasks, and we align wraparound solutions to help make that transition for them, where it's a win-win-win for them, the patients, and the healthcare system as a whole. We have something, just to take a little bit further, what we call vital signs. These are sort of the key KPIs for practices. We want to make sure practices drive success in value-based care by providing better access to care for their patients, integrating with the rest of the network in their market, so with the specialists, with the hospitals, with the post-acute community, whether it's nursing homes or home health, and entering into value-based care arrangements with the rest of the network. And then make sure that we have good data, that CMS has good data through complete and accurate documentation of the disease burden for patients, which is an important part of value-based care. Vytalize has been growing rapidly. As I mentioned, we started out as a practice in 2014 in New York and New Jersey, and have been growing across the country since then. We're one of the fastest growing ACOs. We today manage approximately 450,000 attributed patients with thousands of physicians across the country. We have raised $200 million today from amazing investors, including North Coast, Enhanced Healthcare, Jory Capital, Kitty Hawk, family, friends, a lot of folks that have supported us throughout the years. And we're very excited about the progress and what we've been able to build over this period. Again, 10 years. What we're most excited about is our results. Value-based care, it takes time for the results to come out. So the last available public full year results are 2022, where Vytalize was a top performer across the triple aim, whether it's medical cost, quality, or patient experience. We generated over $1,300 savings per patient per year. We did this on a population of around 10,000 within the ACO REACH program 2022, and we've been scaling that across all of our attributed lives since then. What's ahead? We're now doing a lot of development investment in our data and technology to make things easier for practices, lower the burden, administrative burden, and bring additional tools and programs to drive even better results. A key thing we're focused on in 2024 and 2025 is getting more primary care doctors within our highest density markets so that we can build out the networks and have more density and negotiating power and a footprint that is benefited from having that density. And we're starting to expand into new lines of business through other payers. So we've gone from just Medicare to Medicare Advantage, and in some of our markets now we're doing commercial and Medicaid, and we're looking to scale that across our markets as well. You can help us by spreading the word, by helping us recruit great talent. We're a remote first company, so we have employees all over the country, as well as practices all over the country, and would love friends, family, doctors, send them our way. We'd love to see if we can work with them and help strengthen Vytalize. So thank you very much. This is our update for today. Really appreciate all the support over the years, and hope you have a great conference. Thank you again. Bye.
Thank you, Faris. Next up is Narratize. Narratize is our most recent investment from the syndication fund. The company is led by Katie Taylor.
Hello, I'm Katie Taylor, CEO and co-founder of Narratize, the trusted generative AI co-author designed for innovative enterprises. 93% of companies are buying generative AI right now, and more than 2/3 expect their investments to increase in the next 3 years. The challenge is only 13% of research and development and product teams are regularly using it, even though the ones who are not only seeing productivity gains, but revenue gains. The number one concern among leaders is inaccuracy. And the number two problem is the lack of usability, especially in high reliability industries like aerospace, healthcare, and manufacturing. Narratize is the generative AI co-author that is trusted by the world's most innovative brands. We're so thrilled to call some of our early adopting customers NASA, Boeing, the Good Housekeeping Institute, the World Food Forum, and the United Nations, and so many more. Our LLM agnostic approach and the way that we center this platform around the insights of users has led to a 73% higher accuracy rate than ChatGPT in a recent study that we published of 500 innovation teams across the United Nations. Product teams are using Narratize every day to create problem statements, impact statements, and to pitch new concepts. Executive leaders are able to distill their insights into executive summaries. Research and development teams use Narratize to write research reports, project updates, and proposals. And marketing teams can transform all of that rich insight into message market fit worthy thought leadership content. Narratize is a reverse chatbot. So instead of being met with a blank screen and a blinking cursor, you are asked what questions will spark your thought process. And from there, Narratize matches to the right narrative algorithm and then turns into a transformation engine where you can go from a 1,000-word pitch, for example, into a bottom line up front or into a thought leadership article. Some of our early adopting customers have achieved everything from writing research reports to writing custom impact statements meant to spark additional funding from Congress. We're so proud to have North Coast Ventures as one of our investors as we closed our $2 million seed round in late 2023. Moving into this year, we're working to tackle a massive and ever-growing market. Specifically, we focus on science, tech, and medical industries, where we have over 140 global enterprises in our pipeline. Our early users are seeing a 60x value on the time they're spending writing impactful content and communications. So we have two asks of you as part of our investment community and partnership. Number one, please help us with introductions to our next innovative enterprise customers. Here you'll find our ideal customer profile at Narratize. We focus on the Fortune 1000, specifically within the industries that produce the most patents and that have the highest spend on research and development. Within those organizations, we sell into research and development, product, innovation, marketing, and at the enterprise level, innovation like CIOs and CTOs. Please reach out to us if you can make introductions, and I'll have a QR code on the last slide. Meet with us to share your insights, your introductions, and also please contribute to our product roadmap. We're looking to serve as many innovative industries as possible because we are the platform where bold ideas get told.
Thank you, Katie. Next, I would like to invite Marc Abbott, the CEO of 90.io, to share more about their progress in 2023. 90.io is also a syndication fund portfolio company. Last year, they were recognized as one of the fastest growing SaaS companies in the US.
Hi, I'm Marc Abbott, the founder and CEO of 90, and I'm also the founder and CEO of Humalytics, Inc., which is the holding company of 90, which is what the North Coast Ventures has invested in. Really appreciate being here. I want to tell you a little bit about 90, who we are, what we've accomplished over the last year or two, as well as where we're going. Who we are. We're a platform that gives ambitious founders everything they need to build a company they'll love forever. This is pretty important to us. We believe small and mid-sized businesses are the lifeblood of a healthy society, and we think that we should do everything we can to support the founders and the CEOs of those companies, because we actually believe that building a great company is not as difficult as most people think it is. I'll get into that in a little second. About 90, we're an innovative cloud-based platform that currently helps over 11,500 organizations and hundreds and thousands of their employees build what we refer to as an extraordinarily productive, humane, and resilient organization. We were founded in 2016, but the idea for 90 goes all the way back to me sitting on boards back in the mid-2000s. So right now, these are companies that either have a coach and they're running on an operating system like something like EOS, which you may have heard of, or they're basically self-implementing and they're looking for an operating system like 90. We actually support EOS. We have our own operating system called 90OS. Our team is over 170 strong, and every one of our team members loves providing ambitious leaders and CEOs with all the concepts, tools, and disciplines needed to build a great company where employees are focused, aligned, and thriving, because we deeply believe work shouldn't suck, right? I've got a book coming out called Work 9.0 talking about how we can build companies where people genuinely love going to work and genuinely love mattering and doing amazing stuff. So what are we doing? We're basically giving people an integrated business operating system. Every company has an operating system. When they start, it's accidental. They're pulling together a bunch of documents and Excel files and folders and things like that. But over time, they need to start getting their act together and putting everybody on the same page, using the same types of tools, speaking the same type of language. So they go from accidental to intentional. Then they're sitting here going, you know what, this company building thing shouldn't be as difficult. Lots of people have built companies, and it's really the same as people building a house. You need a vision. You need plans to turn that vision into reality. And then you need a bunch of tools and disciplines, right? The tools are levels and hammers and nails and screwdrivers and all that. And it's the same thing for a company, right? A company needs a vision, right? Then it needs plans and strategy and goals, and then it needs a bunch of tools, right? And it's silly for entrepreneurs to be building their own tools at night, just like it'd be silly for a general contractor to be building hammers and saws and screwdrivers, etc. So, we have, as I said, everything you need. So there's dashboards and there's process tools and meeting tools and feedback tools and goal setting tools and issue sharing tools and to-do management system. There's a whole group of tools that are integrated in this platform. And the beauty of the platform, because it's all integrated, is it's a system of record, and it's an amazing data accumulator, which helps us get everybody on the same page. Speaking of same page, what we're really all about is having people become agreements-based leaders. If you think about it, agreements are everywhere within an organization. Your core values are agreements. Your just cause is an agreement. Your big, hairy, audacious goals an agreement. Your ideal customers an agreement. Your unique value proposition. And what you want to do, and more, that's on the slide, right? What you want to do is make sure this is all as explicit as possible, that it's coherent and it resonates with the vast majority of your employees. When you can do it, the magic happens. So the larger your company gets, the more important it is to be explicit, coherent, and resonant. So that's what we help people do. We help people get to that winner's corner. As far as performance goes, we were up 85% almost last year. We were up 56% in paying users, 63% in paying companies, and our net revenue retention for our ICP, which is companies with 10 or more, was 131%, which in the SMB space is pretty much top of the game. We also had a great year in terms of doing a raise. We raised $35 million. We had our original Series A investor Insight come in. We had Blue Cloud come in, and another venture firm, Catalyst, come in. We hired a CFO, we hired a CTPO, and we did really well as far as building out the organization. In terms of future, just so you know, we have a bunch of new tools coming out: a survey tool, a knowledge sharing tool, a benchmarking tool, a project management tool. We have a lot of tools coming out. We're also incorporating AI into the platform, and I've got a bunch of books that are coming out. My first one hopefully will be out in the spring, called Work 9.0, and it's talking about the next two ages of work. As far as our ICP goes, we focus on small and mid-sized businesses, I mentioned earlier. We will soon start going after enterprises, probably not until next year. And then we're also going to go after investment companies, people who operate multiple enterprises, give them some great reporting, give them some processes and standardize, as well as some benchmarking. We're delighted to be a member of this community, and proof of value is we're used by several of the companies. But another proof of value is our average company grows about 20% per year, which is amazing. And then if they use the full platform, the churn is less than 1% per year, which is also amazing. That's all I have. Went over a little bit. Appreciate your time and wish you all an amazing 2024.
Thank you, Mark. Last but certainly not least is Gary Ellis, the CEO of Remesh. Remesh is a Seed 3 and Acceleration Fund 2 company.
Hi, I'm Gary Ellis, co-founder and CEO of Remesh. First and foremost, thank you so much to the North Coast venture community for being such strong partners with us. Remesh has always been grounded in the same mission. We saw about a decade ago, and we still see today, this massive opportunity for disruption in the insight space. There has not been amazing technology to really connect decision makers and leaders at businesses, nonprofits, governments with their constituents, the people that matter most, the audiences that they're making decisions around, and really enable, engage, and empower them to have meaningful dialogue and discussion with a data exhaust that allows for better actionable decision making. In order to make this happen in a reality, we've built one core technology and wrapped two products around it. A live version, which is a synchronous product and an asynchronous version, which we call Flex. Both of them allow you to have a one-to-many and many-to-one dialogue where a single individual engages with that audience, and in a seamless end-to-end platform, we allow you to both manage participants, invite, sample, all the way through to report writing and analytics in a way that makes it so that the most seasoned professional researcher can be better and faster at their job, or someone who's just dabbling at insights can quickly pick up our tool and really get a sense of what that audience needs in order to move their project forward. As the economy shifted, as the way VCs have approached companies has changed, we did need to take a step back and reset our life cycle. And we did that in mid-2022 with a reduction in force. We kind of termed the before time Remesh 1.0 and the after time Remesh 2.0. I have broken Remesh 2.0 into discernible 18-month chunks to accomplish very concrete and digestible strategic goals. The first phase was about stability and austerity, making sure we were driving the right efficient business. We had enough profitability that capital wasn't our primary or chief concern. After we achieved that, the next phase is going to be all about beginning that growth cycle again, restarting that growth engine. And then, assuming we're successful there, which I plan on being, we'll enter a scale phase for phase 3 of Remesh 2.0. Dialing in or zooming into Remesh 2.0 phase 1, like I said, that phase was all about creating a technology-focused company that had the right inherent healthy SaaS metrics to really justify getting back on that growth trajectory. The strategy to do so was twofold. First, increase our healthy self-use SaaS revenue. That's the good ARR that companies want because it stacks and it just makes for a really efficient business. Secondly, we also needed to reduce our unhealthy service revenue that was really bogging us down and didn't have the right dynamics for a scalable business. I'm happy to report that phase 1 was very successful. I will always raise the bar higher. I always want to do better, but when you look at the way that our KPIs kind of came into view, we had a successful first 18 months of this transition. We did see a reduction in bookings, about 43% reduced bookings, but the reason for that is we massively slashed our sales and marketing spend down 73%. So the ratio between those two things is very healthy. We managed to increase our gross profit in this period by 13% while reducing total OpEx by almost 60%. Our gross margin also climbed, so this is much healthier revenue that we're generating. Again, that healthy self-use SaaS, that ARR revenue, not transactional service revenue. We saw our self-use revenue growing by 42%. And if you see the graph on the right here, you can just see our self-use revenue does continue, our self-use usage continues to rise, whereas our non-self usage continues to fall. So we really leaned into that strategy effectively. That next phase, first, we're opening the aperture of our vision slightly. We were a bit of a niche qualitative solution. Now we are believing that we can be and should be a core research solution for our organizations. This means that the user persona that we're going after, how we can go to market has changed and evolved in a much better way. We are more applicable to more people, we solve more needs, and we become core to the organizations that we're selling to rather than a nice to have, which especially in this economic state is of critical importance. I will measure success in this stage by whether or not we're ready for scalability, right? At the end of the day, that's what phase 3 is going to be about. We need to have the healthy SaaS growth metrics at the end of this stage to justify future investment in growth. In order to accomplish that, there's 3 parts to this strategy. First, we do need to open up a new self-use market. That specifically is going to be direct enterprise brands. That may be where you guys come in, a little teaser on the ask coming up. I think there's a ton of opportunity and we're seeing really good early signals on the direct brands that are starting to work with us to augment or replace their research needs. We, of course, have built a healthy foundation through phase 1 that includes an existing self-use business. A lot of that's on the channel side, or what we call channel side, consultancies and agencies. The expectation is we've got massive room for expansion. It's dual enterprise sales cycles, so it's a bit slower, but we're very sticky there, and we need to see our net revenue retention be in the levels that justify growth. We do want to retain our existing service business because it's a profit driver for us at this point as we've reduced the unhealthy aspects of it. So getting back to that teaser, I do have an ask for you guys this time, and we haven't really been able to make this ask in the past. which is exciting to me. We are now ready and open for introductions to companies, to brands. Anyone who's doing north of, call it $50 million of revenue, or has an employee base that's larger than 200 people, has a need for our technology. Most of these clients are using Qualtrics or other market research technology. Clients are currently buying us and augmenting their Qualtrics license or replacing Qualtrics, and we're getting really, really positive feedback about the unique value that we're providing above and beyond their existing technology stack. If you guys have introductions for me, send them directly to me, Gary at Remesh.ai. But I'm really, really excited for the position that we're in. I'm really, really grateful to North Coast Ventures for all the support you've given us.
Thank you, Gary. Now let's move on to headlines from the broader portfolio over the past year. We have a number of other portfolio companies that appear to be on the path to a successful exit. I'll share brief headlines related to a handful that we are excited about, starting with Amplifund, which is part of our Seed 1 and Acceleration 1 and 2 portfolios. Amplifund is led by seasoned CEO and provides grants management solutions. The company added 76 new customers in 2023 and reached $8.8 million in annual recurring revenue. They anticipate exceeding $11.5 million by year's end. Current profitable growth has positioned Amplifund to be a market leader in this fragmented space as there's increasing interest from strategics and private equity-backed platforms. Next is ScriptDrop. The company has developed a platform to manage prescription delivery. Current customers include Rite Aid, Publix, Albertsons, and Giant Eagle. Revenue for 2023 was over $32 million. ScriptDrop's made meaningful improvements to their gross margin over the past year, reaching 17% in Q4. They've also expanded partnerships with several large players, including Uber Health. Society Brands is a technology and operational platform that acquires e-commerce consumer products companies that primarily sell on Amazon and their own direct-to-consumer sites. Society secured a $200 million credit facility to fuel acquisitions. The company has completed 10 acquisitions with over $100 million in annualized revenue run rate and over $10 million in asset-level EBITDA. To help support further growth, the company raised a $10 million convertible note in 2023. Navistone reached $15 million in run rate revenue in 2023. They provide a solution to identify and engage unique direct mail prospects via website visitor and behavior tracking technology. Notably, they were profitable for much of last year and are focusing continued growth this year as direct mail is being widely adopted to cut through the growing digital marketing noise. Genome Oncology enables precision medicine through advanced genetics interpretation. The company generated nearly $6 million in revenue in 2023. Genome signed 4 new clients in Q4 of last year and has had a strong start to Q1. The final quarter represents the highest level of new logo additions on a quarterly basis in the company's history. We believe precision medicine and the markets this company serves are still in their infancy, but have substantial ongoing opportunity for many years to come. Formotive is part of our syndication fund, and their digitally native insurance enablement solution has struck a chord in the market. 2023 CAR was $5.8 million, up from $2.3 million in 2022. They landed a contract with a top 5 P&C insurance carrier in Q4, and their forecast for 2024 is to do over $9 million. Target customers include top 50 insurance carriers who sell through agents. HATCo had a strong 2023 and now boasts over $6 million in contracted annual recurring revenue at 84% gross margins. The company's platform automatically aggregates and verifies the credentials of healthcare professionals. The company completed a $27 million Series B funding round led by Nora Mosley Partners in Q3. They have over 36,000 clinicians on the platform and have completed over 28 million verifications. Finally, 2023 was also a big year for Uptime Health. They simplify dental equipment maintenance, repair, and purchase events. In Q4, Uptime announced it would acquire a complementary business to expand offerings tailored for the dental industry. They currently have over 100 clients and achieved $1 million revenue in 2023. The company has a term sheet for an 8-figure funding round expected in Q1. As I wrap up with our portfolio headlines, I would like to remind our investors that a detailed report, including a chart like the one shown here, along with a written narrative about the progress and significant updates related to each of our portfolio companies, can be found on the member portal. This example chart shows the overall composition and performance of one of our portfolios. And with that, I'll turn it back over to Todd for the Fireside Chat.
Thanks, Daniel. I am pleased to be here with this year's Fireside Chat guest, Dr. Marc Harrison. With a distinguished career that spans both continents and specialties, Dr. Harrison has been at the forefront of healthcare transformation for some time. Mark is currently the CEO of Health Assurance Transformation Corporation, also known as HATCo, where he is championing a bold initiative that promises to redefine how we approach healthcare. Previously, he was the CEO of Intermountain Healthcare, one of the country's largest healthcare systems. Dr. Harrison also has a strong Cleveland connection, having spent over a decade at Cleveland Clinic, serving in several roles, including Chief Medical Officer, Chief International Business Officer, and the CEO of Cleveland Clinic Abu Dhabi. So, with that, Mark, thank you for joining us.
Hey, thank you very much. It's a pleasure to be with you.
Terrific. Well, we'll jump right in here. It's obviously been a dynamic past several years in healthcare, to say the very least. The pandemic has accelerated the adoption of so many technologies like digitization, telehealth, remote patient monitoring. So, to help create a baseline picture for the conversation, can you characterize for us where we are at this particular moment, the current state of healthcare in the United States?
Yeah, and please know that I'm an optimist. Okay, I made the move from Intermountain to HATCo because I believe that the future can be different. Actually, we're in some trouble right now. When you mentioned the pandemic, and it taught us a ton of incredibly valuable lessons, including the fact that we can move fast and make change when we need to, when people's lives depend on it. And I'm pretty disheartened by the extent to which particularly health systems have actually regressed in the back end of the pandemic and moved away from some of the technologies that you've described. Right now, about half of U.S. healthcare systems are either breaking even or losing money. We're seeing enormous number of exits, particularly in rural healthcare, and healthcare deserts are getting worse and worse, both rural and urban. And to be candid, most of the healthcare innovations that we're seeing from a digital standpoint are only point solutions, and they are both adding cost and headcount and doing very little to change the overall healthcare footprint. And then finally, we're spending 19% of GDP on healthcare, and we're getting the worst public health outcomes of any developed country. So I think we are at a time of enormous peril and enormous opportunity simultaneously.
Yeah. Well, it is quite a crossroads. And one of the technologies that comes up in the context of this crossroads is AI.
Yeah.
Love to hear what you're already seeing as far as adoption and impact, and what you expect to see in the coming years.
Yeah, I actually think we're at that moment that, do you remember when GPS started to be something that was a thing, and you could actually buy a GPS unit for your car or whatever? And now GPS is in everything. So there are not a lot of GPS companies anymore. It's in your watch, it's in your computer, it's in your car, it's wherever. And I think AI is at that moment right now. And we'll talk a little bit about Suma Healthcare in a moment, I think. But when they assayed their current operations, I think there's 15 or 20 different AI-based applications that are already in use there. And I think AI is at a huge inflection point in terms of adoption and relevance. And B, I think it's incredibly exciting because this is the big productivity unlock that we've been waiting for in order to help health systems become resilient.
Terrific. So let's shift and talk HATCo here. Tell us about the genesis of the concept, what it's become today, and your vision going forward.
So it's actually a story of two people and with very similar values who've come at things from a different angle. So Hemant Taneja is the CEO of General Catalyst. I think incredibly good healthcare investor, and I think a really good thinker about healthcare. And he really has focused on what can technology bring to the healthcare environment, and in the context of what he calls health assurance, what I would historically have called population health. and what he calls radical collaboration, something I would always just call partnerships. And it's this idea that we're better together, and that the answers to our problems are at the intersection between great technologists interacting with great clinicians and great operational leaders. And Hemant has been working away on his end of things for a decade, with enormous number of investments and dollar size investments on the portfolio company side. And I've been working at it practically, trying to be a great health system leader, domestically, internationally, and now at HATCo. And I think when you put the two of us together, real magic can happen. And I think that's the moment we're at right now. That's why I came over. As I mentioned to you before, I'm not a super money-oriented guy. I want to see health systems become resilient and financially stable. I'm an impact player, and I constantly am thinking about the people who are underserved by lack of access and poor ability to navigate and unaffordability of American healthcare. And I think we're going to come up with a model that can help solve a lot of those problems.
That's great. And as I understand that model, there's the approach of technology having a broader context, not series of point solutions that are supported. There are these 20 partnerships that you have with hospital systems for technology innovation both ways. And then there was the acquisition of a health system. And
we have an LOI. I want to be very careful that I don't presuppose the outcome of the regulatory process. And I want to show immense respect to your Attorney General in Ohio. We've got an LOI. There's a ton of work that went into it. We're very excited about it. We are optimistic, and we think we have a lot to offer the state, the country, and the world. But we also respect the process.
Okay. Point taken. Maybe I'll ask it this way. As you thought about the candidates, because there are 6,000 some hospitals in the country, what was it about Suma that stood out that made it the right partner candidate for HATCo?
Yeah, so I think 5,999 of the distressed hospitals called me after our announcement, looking for some help or some opportunity. So Suma is special, and it's the right size. So it's about $2 billion in revenue. It's the largest player in its market. It's relevant. It has 30 years of history of being a payer provider. It has a 4.5-star plan, albeit not a large plan. I think about 70,000 members. And the most important thing is that it is governed and led by individuals who recognize that doing more of the same and expecting different results is actually a realistic approach. And the two of us know that many, if not most, health system CEOs are just kicking the can down the road. They're playing the same game that they've played for a long time, and it's just not going to make things any better, to be honest. And Cliff Devaney, who's the CEO of Suma, and George Strickler, who's the board chair, are different. They've known for several years that they need some sort of alternative approach that does not just strip away the leadership team and lose the corporate headquarters and be subsumed into a larger system. They know they need something different, and the fact that they are inviting us in to help, I think really bodes well for the likelihood of success of this project.
Very good. And help us understand the unique relationship as not just a provider, but a payer, and how to think about value-based care in that.
So I'll use the telehealth example. As you mentioned, the pandemic, telehealth capability has been out there for a long time. Nobody used it to speak of on the health system side because it didn't pay, because there were, regulation made it difficult to charge for the services, et cetera. Pandemic comes along, all of a sudden you can do that, and everyone adopted it. And then the pandemic ended, and everyone went back to the old way of doing things because it didn't make as much economic sense. if you're a payer provider and you get that first premium dollar and you can use it however you see fit to keep people well and keep them in the least restrictive, least expensive environment possible and still get good results, then you use a tool like that much more freely. And we did that at Intermountain. Kaiser's done that for a long time. Geisinger does it as well. So those are the kind of organizations that have that power to do the right thing for the patient and not be as constrained from a regulatory standpoint. It's very, very, very powerful.
Yeah, and we heard earlier tonight from Vitalized Health and in our portfolio, which offers value-based care for physicians' practices. And one of the things we've observed is that although we thought and hoped that the landscape would change rapidly to welcome value-based care simply because it's always felt like it's the future, but it's a future that's very far away and keeps moving. It feels like there's been a lot of progress over the past several years with the regulatory regimes, with providers' willingness to engage. So do you have a sense that now really is the time to lean forward on value-based care?
I sure hope so. I mean, we missed such an opportunity during the pandemic. What I would have done if I were the regulator is I would have actually tied all those CARES Act dollars to actually a transformation towards value-based care, because change was happening anyhow, but didn't happen. I do think that now is the time. I think there's a recognition that, as I mentioned earlier, our results aren't good clinically, and we're spending too much for those bad results. And I think that evidence-based care that is oriented towards prevention is the future, and I do think now is the time. By the way, you're correct. The government has been HHS/CMS have been the best proponent for value-based care. They really have done a very good job in a very thoughtful way and a very transparent way about how we should move, and I'm grateful for that.
Yeah. Well, similar to value-based care, which I think is largely about alignment of interests, another theme that we see in startups that we evaluate and several in our portfolio, including Redi.health and ScriptDrop, is the idea of adherence, right? Of helping to ensure that patients have access to the right medication in the right quantity at the right time with the right support. And be curious, as you think of a new health platform at HATCo, what is the mandate and the opportunity around adherence?
So I think there's huge opportunity. We mentioned it a little bit earlier, this unlock that AI should provide us. Here I am, I'm a physician, I've run health systems, I understand how to navigate, and my cancer medications, I still need to remember to order them myself. And when is it time to get my labs drawn? When is it time to have testing done? And I think that's really quite a shame. And makes you realize if I have to work this hard at it, how does like an average person who maybe doesn't have the contacts, the time, the resources, et cetera, my guess is they're getting systematically undertreated, undertested, underserved. And I'm hoping that AI added to the current system in a thoughtful manner should help close those care gaps.
Very good. And then, lastly, just for those health tech startup founders and investors listening, what advice do you have for them as far as how to best partner with organizations like HATCo and be successful with those maybe next gen organizations that are really embracing the new healthcare paradigm?
Yeah, the future is bridges, not walls. And I think that historically, too many founders have thought, okay, I'm going to create my company, I'm going to scale it up to X number of dollars, and I'm going to get exit and scoot and then do it again. Yeah. And look, if we're really honest with each other, most of those point solutions haven't really moved the needle at all. And so they need to be thinking about how do they build those bridges that make their IP valuable in the context of other people's IP, and be willing to be flexible and thoughtful about collaboration.
Terrific. Well,
does that jive with what you're thinking?
It does, and we hear point solution to be sure. The average product owner at a hospital system isn't waking up in the morning saying, "I want one more system to be accountable for."
Oh my
to
goodness, no,
service,
right?
to have sign-on and integration issues with. So absolutely, and I think part of what we've always tried to balance is as we look at these solutions, not just in healthcare, is how do you get best of breed, but also a level of scale and interoperability, right? Because those two things kind of fight against each other.
They do.
Something that does everything usually doesn't do much. So, the point solutions, I think, can work on the highest value items, but the level of integration needed now with the mothership and the bigger platform is more important than ever. And I think we're really hopeful that in a AI landscape, there'll be better ways to use agents, map data, and have some of these disparate systems better engage with each other.
I couldn't agree more. Absolutely agree.
Terrific. Well, Marc, I wish we had more time. I really appreciate, you're taking these moments here to talk with us and share your perspective. And to everyone watching at home, we just want to thank you also for joining us and look forward to a successful 2024.